Okay, so this is my weekly forecast video for the fifth and final week of January 2025. January has had 5 trading weeks, and it's been a long month, but um, it's been good to us, at least in the week that has just passed, in the fourth week. So I'm going to be reviewing what I expect to happen in the markets in the coming week and how I intend to trade these markets. As usual, we start on the weekly calendar, and I've taken a look at it. It's a big one. It's a big one, guys. So this is the thing. This week Monday doesn't have anything, and I don't think Monday is going to present any meaningful setups just because of the way we closed. When we go to the charts, I'll show you what I mean. Tuesday has CB Consumer Confidence by 4 p.m. my time, which is UTC plus one. Not a big deal. So if any setups present themselves on Tuesday, preferably in the morning, I'll take them. Wednesday, the Bank of England Governor Bailey is speaking and FOMC is happening. I'm not trading on Wednesday. Let me just say, Wednesday is not a day to be a day trader, as far as I'm concerned. The reason is this, and I got burnt in December. I remember it very, very well, which is why, fresh off the back of my December experience, I remember I made this change in December when I reviewed my December trading in January. And so this will be my first opportunity to implement it. Here's what I found, particularly about FOMC. FOMC comes out at night, as you can see, 8 p.m., 8:30 p.m. Right. And what tends to happen of the big three, CPI, FOMC, and NFP? FOMC, in my experience, tends to be the one that impacts the market the most. When I say it impacts the market the most, I mean in terms of what happens in the market before it comes out and also what it does when it comes out. So, for example, CPI, I have found CPI and NFP, I have found if there's a trade, on let's say the morning when CPI is coming out in the afternoon, a lot of the time you can take that trade. The market will move normally. Volatility can be normal, not all the time. Volatility can be normal, and the market will be respecting key levels, will be moving normally before CPI. Then CPI will do whatever it wants to do. It might just take off and spike in one direction, or it might manipulate going both directions, or it might reverse what had happened before CPI. But I have found that more often than not, and at least relative to FOMC in particular, CPI you can trade the day before CPI comfortably. You can trade, the session before CPI comfortably. Not comfortably with a bit of discomfort, but you can do it. FOMC is similar. Now, I mean, the thing with FOMC, first of all, is on Friday. And so by that time, most people are done with their trading anyway. Hopefully, if you've had a good week, so you don't trade on NFP day. But I've also found that NFP day, you can take a trade before NFP and exit that trade before NFP, and there will be some volatility because of the three, NFP tends to manipulate the most. So the market might be moving normally, then NFP just comes and scatters everything. Take out whatever low, take out whatever high. I might just consolidate for the rest of the, or sometimes might keep moving in one direction. But you see FOMC, and also I have noticed over the past couple of months that you see NFP CPI, they usually cause between 50 and 70 pip moves in the market. 50 pips spike up, 70 pips spike up, might retrace, But you see NFP CPI between 50 and 70 pips. And this is on Euro USD, GBP USD, NZD USD. You can expect about a 70 pip range for that news event. FOMC, from 2 sessions before FOMC, the market already goes into those doldrums, starts misbehaving, starts not respecting key levels, doesn't do what it's supposed to do. And then when FOMC come out, the last FOMC, December's FOMC can push the market as much as 150 pips, 190 pips, 200 pips sometimes. FOMC takes off in one direction and will keep going. You will see two huge far candles. Like you see the sort of candle that you don't think this thing can go any lower. The next candle needs to retrace to figures out. And then the next candle has the same range. or maybe even higher, or just slightly lower range than the previous one. I have seen it. This is my personal experience with FOMC. So FOMC, and especially when earlier in the day, Bailey is speaking, out of the UK, it's not a day that you want to be in the market at all. Because any trading opportunities that you find on that day are not likely to yield anything. It'll probably just dance around, chop you up, and then FOMC will eventually do what it was, and you can't trade it. So, yes, Tuesday, Wednesday, there shall be no trading from this end. Thursday, Euro's own FOMC, the main refinancing rates. I truly don't want to be in the market on Wednesday or Thursday. Now, after this has come out at 2:15 p.m., right? I might take a trade Thursday afternoon. I had no. Look, Wednesday and Thursday I'm not trading. Monday I don't think I'll have a trade. Tuesday, if I have a trade on Tuesday, I'll take it. Wednesday I'm not trading because of FOMC. Main refinancing rate is big on the euro as well. Now, if I see setups on the pound on Thursday morning, or on the New Zealand dollar on Thursday morning, then I might take those trades because I don't expect the euro refinancing rate to impact correlated pairs, that much. That said, I'm still wary of it. Friday, I don't have any problem with. I'll happily trade on Friday. Preliminary CPI doesn't do anything. Core PCE price index on Friday afternoon. A lot of the time, that tends to even move the market in my favor, in my direction. So I don't anticipate having a lot of trading days this week. For example, this week that just passed, I had 4 trading days. Wednesday was the only day I did not trade. And each of those days, Monday presented a setup, Tuesday presented a setup, Thursday presented a setup, and Friday presented a setup. I might end up not even trading this day at all because I don't think Monday will provide any setup. I'm not expecting anything from Monday. Tuesday, if it provides a setup, I'll take it and hope it plays out favorably. So my trading days have been limited essentially to Tuesday and Friday, and that is if they present setups. So if Wednesday presents a setup, I'm not interested. If Thursday presents a setup, I'm not interested. I hope they don't present setup so I don't have to make that decision. But I'm looking at Tuesday and Friday potentially for trades this coming week. That said, where did we close on the weekly? On the weekly, look at this candle. Massive, massive candle. I was not expecting this at all. I was expecting this candle to start out bullishly, but then after clipping this high, I was expecting it to retrace and close in the middle of the range. That did not happen. I was wrong. If we go to the pound, which is where I was expecting most of this to happen, we can see that this huge weekly fair value gap visible. Let me make this full screen. So if we can see that this weekly fair value gap has been completely inverted, closed strongly above. And if you go down to the daily time frame as well, we can see that after this weekly fair value gap, there was still a daily fair value gap up here. Even that was closed above. So 2 higher time frame key levels have been completely disrespected. This range has been almost completely traded through. I don't expect price to find resistance anymore in this range. And we have this potentially signals the start of a reversal. When you see this was Monday's candle, Tuesday, Wednesday, Thursday, essentially because there was a battle going on within this weekly fair value gap. So Tuesday, Wednesday, Thursday essentially tried to determine how was happening. And then Friday just said, to hell with it, and then ran away. Friday's range, and especially for a Friday, you're not expecting that much volatility, that much one-sided volatility on the Friday, 150 pip, day. So what does that mean for us? Now on the daily time frame, of course, you go up to the weekly. So on the weekly time frame on the pound, there's no weekly fair value gap. Let's see what euro is. Let's see what euro is saying. Euro no weekly fair value gap either, right? So on the monthly though, we can see now if you go up to the monthly, we can see that okay, if price has traded, you see, price essentially respected the consequent encroachment of this monthly fair value gap. That is the midway point. Price had already tapped into it since November. Then December came back. This January candle took out November and December lows, traded deep into the monthly fair value gap, found support, and is now heading. So there's every likelihood that it is going to close from the way it looks outside of this monthly fair value gap bullishly. If that happens, the next reasonable target on the monthly time frame is this monthly fair value gap at least to see whether price will find resistance here or if price will trade through it as well. But for me, being a day trader, from where price currently is to the open of that monthly fair value gap is a 139 pip range. That's the 139 pips of bullishness that I would look to capitalize on intraday. So my short-term bias on the monthly time frame on euro dollar and on pound dollar is bullish. We can see something similar on the pound dollar. There's also a monthly fair value gap up here. Look at how huge this monthly candle is. Traded all the way down to these lows and then strongly rejected. What's the range of this candle? This was a 378 pip rejection to the upside. That tells me something. That's momentous. And so I am anticipating from this point up to this monthly fair value gap is another 340 pip move. So there's a 340 pip potential up. There's a 340 pip upside potential on the pound dollar. And so if I go down to the weekly, let's see if the weekly doesn't have anything, for me, no point of interest. Let's see on the daily time frame, no daily fair value gaps have been created that I can potentially look to take trades from, right? Except on the euro. Now on the euro, there's this small daily fair value gap here, but look, the chances that price will trade all the way back down here before continuing up, relatively slim. I mean, there's this daily swing low as well before this point of interest. And so I go down to the 4 hour to see. Now, this is the most interesting point of interest for me here. This 4 hour fair value gap right here. This 4 hour fair value gap, not this first one, this one. If I see price at the start of the week, so on Tuesday, maybe Monday just does something like this. Maybe Monday trades into this 4 hour fair value gap, fails to rally, maybe gives 1 hour or something. I won't be interested in that. I want to see on the 4 hour a swing point form. You see that there are no swing points here, no swing points. I want to see a swing point form on this 4 hour time frame. So this is my ideal trading scenario. I want to see something like this. I want this first one to provide some, bullishness, so that when the swing point forms, that swing point can in turn be swept for price to then trade into this lower fair value gap and for the bullishness to resume. This is what I want to see. On the euro dollar, this is what I want to see. On the pound dollar, if there are any 4 hour. So you see, there's a 4 hour level here as well. Another 4 hour level nestled inside the inversion of this weekly level. So I want to see some bearishness. Of course, there's a 4 hour fair value gap here, but I'm not interested in that at all because it's in the top of the range. So I want to see something like this. Now, price may do this. I need to see a swing point taken out. I need to see that liquidity sweep. So if price does this and gives me the entry from here, I'll take it. If it decides to come all the way down here and give me the entry from here, I'll take it. Those are the circumstances under which I'll look to take trades this week. Let's see if the New Zealand dollar has anything. So you see the New Zealand dollar has this. And it seems to have, so again, two fair value gaps, this one, this one. I want to see now, this is interesting, right? So a swing low has already formed on the New Zealand dollar. The only challenge here is that there is this 4 hour fair value gap below it. So what I might look to do on the New Zealand dollar is when price takes out, if price takes out this low, trades quite deep into the 4 hour fair value gap and gives me an entry. Hey, look, it fits my rules. I'll take the trade to the upside. So that's what I'm looking at to trade this week. Let's see how it goes. Remember, like I said, I'm only looking for the setup to print on 2 days, Tuesday and Friday.